record this so we can post this on YouTube. So for those that weren't able to um, tune in today, so let's kind of move on, right? So first thing is first, let's kind of break down Tesla first, right? So remember what we said, right? Tesla, we're consolidating in the zone here, right? 2 days of basically stuck in. So we see here off the rip on a daily, right, where this price action is not moving. It's not breaking this 245.75 and 258.61, right? It never broke above it or below it, right? Consecutively for 2 days. And what we said was the range is getting tighter. So if you look on the hourly chart, right? We look on the hourly chart, right? First conviction why I took a short this morning. If you go to the extended hours, let's go to the extended hours, right? Extended hours, first thing is first, right? We see immediately, right? We're holding this trend line, right? Trend line hold. So trend line hold here, right? Trend line hold there, trend line hold here, and then a trend line hold here, right? And they're still trying to hold this trend line right here, right? And your pre-market, we broke below, right? We broke below it and retested it, right? Retest and failed, right? So off the rip, right? Off the rip, that is my thesis, right? And you can see here this upper trend line here, which is also here as well. So you can see that we're getting tighter and tighter on the daily range as well. So you see this upper trend line. So use the after hours and the pre-market hours to give you a better thesis. So this is what you call a bullish pennant until something breaks to the upside or downside, right? So every circle here was an area of um, basically potential buyers slash sellers, right? So boom, right? So at pre-market, right? We broke below, right? Bounced up this trend line here at 245.75. Grab liquidity, right? Retest this lower trend line right here. If you can see right here, let's go to the 15-minute chart, and then you can see it, right? Off the rip, right? This is a retest of this trend line, right? Break below, right? Retest, so they filled that gap, right? And then back down. So at open, what I did was I immediately took into shorts, right? And I wasn't stopped. I understand my stop loss was almost invaded, but I held these because that was my partial reasoning behind it, right? And we scalped these for a nice 40%. And as soon as I saw this red candle and it broke below, right? I immediately took short, and I did buy a good some lump sum here. Let's say here my stop loss was basically the high of this candle here. um Basically this is your high, right? Until this candle on a 3 minute, right? You use a 3 minute confirmation candle, right? Until it breaks over that, we look to close short. But until it actually breaks over, we look to close, right? And what we did was we scalped these here, right? Nice banger for like a 40%. And we were initially out here, um, and these were nicely paid. If you were able to capitalize on this today, then they ran over 100% plus. Like you bought these contracts for like 320 or something like that, and they ran to like $9 or $10 today, right? And the reason why I tell you guys to start looking into extended hours, because basically you got to use more time. Remember, time is on your side, right? And when you look at the larger time frame, you see how we tap this fair gap value. I mean, we touched every single trend line several times until it broke, right? Let me kind of zoom in here so you guys can kind of get a glance of it, right? And this is why I have my support here, right? This is your swing low, right? And then this is off the rip. Like if you guys held these throughout the end of day, they grab liquidity down here because you have this fair gap value down here, right? And that was in effect. But you see how this is your demand, right? This is your 30-minute demand, right? And they broke and held it so far. But you off the rip, like you can see the setup. The setup is there, right? No point of trying to get faked out and all that stuff. If you see profit, take it, right? And then you also have this bear trap setup, right? If you go here on a 3 minute, I mean on the 1 minute, you can see just how perfect like this price action was. So you, if you know, we held these, but I just didn't want to hold them and didn't like the action. It was just quite choppy for Tesla. You know, Tesla usually is very volatile compared to you know, your typical trading stocks and all that stuff. So one thing to be mindful for is that, right? And when I one thing is when you're trading within this, like every day, you want to look into watching these key levels. And the way I mark the key levels is basically, okay, right? We made a low, right? Made a low here, right? And made a lower high. So therefore, this retest of prior day high, right? Failed, right? We never ever broke above this on a 3 minute. So off the rip, off just from this alone, we are in a bear setup. We making lower highs, showing that this is looking to move lower, right? And we were scalping these from here somewhere to here for like a nice 40. Didn't want to get greedy and just, you know, saw other setups. You just gotta. I mean, if you guys want to hold these, you gotta held them nicely as well. But you know, to be hindsight, I mean, you know, this is relatively nice. And one thing to be noting now is, okay, this is now no longer an area support, right? And the way to identify new key levels is, okay, you're, let me go to the regular trading hours so you guys can look at it real quick, right? So now this is your prior swing high here, right? So this area off is now your area resistance. This is where we'll be looking to short if maybe sellers tap in, I mean buyers tap back up here, right? You also have one just right here, right? We made a lower high here, but not quite strong in my sense. But we see that sellers were present above this VWAP. You can also say this is better if you want to be a little bit more precise, right? This is your new swing high at 244.35, right? Every time we make a lower high, this is your swing high, right? And you also have one right about here, right? At 241. So every time we make a low, right? We make a low, and this is also you what I call my bear trap, my bull trap setup, right? You're making lower lows here, right? Your first initial move, let me kind of extend this out a little bit more because this is not looking pretty nice. But see off the rip here, right? Your first move low, right? So what I can tell you here right now is you have that move low from this low, right? So let's measure that, right? Right? That's your low. Your first move low, and then you have this bull trap. Buyers try to push it up, right? And then the measuring leg back down. See how precise that is, right? From that high to this low is literally measured move, right? The same, I literally just copy and paste this. Let me kind of change the color a little bit, like a golden color. Nah, that's not bright enough. Let's go pink. Mm, let's go yellow or something. So yellow, right? So from that high, right? I'm my candle's there, right? And I just literally copy and paste this here from the first initial move, right? The first move from open to this low, right? We made a lower low, right? And then you have this trend line here. Once it breaks above this, right? So you see here, we made a lower low, right? Use your 20 EMA, 21 EMA. I always tell you guys this every day. Just use 21 EMA and you use your VWAP. VWAP tells you who's in control. So if sellers are bearish and is in a bearish trend, price break above VWAP, that's giving us sellers a discount, right? You don't want to buy down lows. You want to buy at a discount, right? And we're making lower lows here, and we draw a trend line here, and this is your swing low here, right? This is your swing high, sorry, right? You can say this is your swing high, and this is your other swing high as well if you want to mark this one too for this trade setup, right? you can add them here, right? But what when we're in the bearish trend, what I care for is not, I don't care if we're above the 21 EMA on the 1 minute candle, I mean 1 minute time frame. I really don't, because that doesn't really give me a better, cheaper discount compared to the 3 minute, right? I always look, first thing is first, whenever I'm taking a trade in any time frame, the 3 minute is the confirmation candle. So the 3 minute tells you like better supporting details. So this was a measured move, right? And these contracts literally banked. So, and then you have that relief bounce here. So this was that's a demand here that we held above during that move lower today. So one thing to note, right, is you have that measure move, that bear trap, right? You have also one here too, right? You make lower lows here. So you can draw this channel out right quick. Let me get that for you here. Where you can extend this channel out, right? And you also have this one here, right? So we're making lower lows, right? Or you can disregard these channels here. Let's just go, just be more day trade perspective, right? We're making lower highs here. I mean lower highs, lower low, right? Tap, lower low, lower low, right? So off the rip, this is your bear trap setup. I mean your bull trap setup again, right? Because your price never really made a higher high. So we're still in a bearish trend, right? And look, on the 3 minute, every time I tell you guys, look, use the 3 minute to give you confirmation, right? And you have this swing low here. So disregard this. This was never created before, right? And once we break above here, you look to short, right? Stop loss, tight stop loss. You can use even this anchor right here if you want to be very, very strategic, right? Stop loss at here. Just really tight, right? And I mean, this did probably dipped into it, but maybe you would have waited a little longer until price really actually got above the 21 EMA, right? And this alone was nice, right? Or you can have it above the swing high too, which is also better. Just depends. This is a really tight setup. You know, you this alone is still a good setup even if you have it above the swing high, right? If price, so I want you to notice this, right? If price continues to make a lower low, right? Draw this out, right? You make a lower low here, right? First move. So you can draw this here actually. So let's go back here, right? Let me get this out. So the first leg, right? And then you have that bear trap setup. So you draw this bear channel here, right? And you can kind of extend it out a little bit so you can kind of draw the top anchor, right? And you extend it out to the top here, right? And see how we tapped it and failed, never close above, right? So every time we break above a swing high, you look to take a position, a just tight stop. Like you can have this as your stop, entry here, close above this trend line. I mean this horizontal ray, you stop out, right? And that is a nice setup to the downside. And this move was a measured move. So you see from this here, from this anchor high, first impulse leg, second impulse leg gave you your measured move. And it did go a little bit lower, right? And it swept liquidity here as well. So this was the liquidity candle and it reversed back up, right? We got these for a nice 40%. Nothing wrong with that. I'm happily fine with making that much percentage wise. I mean, it could have held it a little longer, but that's just hindsight speaking, and not really anything besides that. But you see now the swing high was literally an area of resistance, right? So this is how I mark it on my chart, and this area here could be a area of support, right? An area of support and area support here potentially, right? So this may be a good area to mark. Nothing here because we never broke above, right? Never broke above. You made a high, low, higher high, right? You can mark this one as well. Actually, I will use this instead. So therefore, this is your support down here, and you have a support down here, right? Until it makes a new higher high, then you make you put it as your low. This is not valid because it never made a higher high, right? You have low, high, higher low, lower high, lower higher low, higher high, higher low, vice versa. So that's how I mark my chart. And you have this here. You can mark this one as well. Your your another swing high. So this is just something I do if you're planning on day trading in shorter time frame. It gives you a better clue and idea of what to do. Do you look for gaps, order blocks? No, I personally would use just. I mean, gaps do tell you a lot, right? For example, like you do gaps, yes, matters, yes, but gaps just doesn't give you a full breakdown of the overall trend. Gaps tend to fill, yes, but whenever market is showing signs of weakness and consolidating, you got to capitalize on that because when, let's say Tesla, right? I posted this since last from Thursday watch list to like today. It's been stuck in a range, and when we consolidate, the moves tend to be explosive, right? And you saw today it was pretty big move down, right? It's down like 4%. So I mean, and that's not even after this bounce. So you know, it's still like a good move down. I mean, this is relatively a big move down. So, I mean, it's still good, but I don't use order blocks and I don't really use that because I don't really care for how market people usually the flows and all that stuff. It just gives me an idea, but I don't really go off of that. Order blocks just tell you, okay, maybe this guy's selling here, but you don't. We as traders, retailers, we don't know exactly what they're doing, right? You never know because we're just a small fish in the game. There's bigger fishes, you know what I mean? There's sharks out there. There's like whales out there. There's like the megalodons. We're just like a little tiny fish in the game, right? Do you agree? Yes, gaps matter though. You need to mark them. So how you identify a gap is how do you identify a gap? So let's go to Microsoft, for example, right? We saw bad news from Microsoft this morning, right? So this is already broke below the low from prior day low. So this is your low, right? From yesterday's range, right? So I marked it already. And this, we don't see the gap here, right? But the gap is right here because look, after hours matters a lot, right? So you have your three, no, your 657 candle is your close, right? And you can see off the how it is already from that, right? We gapped down during pre-market, right? And just made a new lower low, right? And just bounced immediately right after. But yes, I would say the gap is filled here, and this trade is still valid. And um, I would like to say another thing is I didn't really draw my prior swing highs, but if you can see here, this is your swing high. You have another swing high here, right? Just use these areas to give you a better edge in the system. And trading, you is a probability game, right? You see here weakness above the swing high, right? So when price tends to consolidate in a range like this, right here, 3 minute chart tells you to, it tells you that weakness in buying, right? See, every time we try to close above, fail, 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 right? And you got to move lower. So that's just how I trade, and I mean, this is kind of like a good breakdown of it. I use volume to see liquidity. I don't use volume to see how much people are like. If we have strong buyers, it's not really going to help you um, break down the trade, right? So we can see here, right? Strong volume candle, right? And then literally just no volume whatsoever, right? And literally this pump back up was no volume. So you got to be mindful that volume does not implement anything. But when you see like liquidity, so let's go and zoom in real quick, right? Look, this is liquidity grab, right? This candle down, liquidity, right? Liquidity right here, right? Look, see all this? This is liquidity grabbing. They're grabbing liquidity from these lows and they're just trying to bounce it right back up, right? But once you see the bounce, it's no volume whatsoever. I mean, you can see a nice volume here, right? But I mean, there's really no volume up there. It's just how I use it. It doesn't really give you a better edge. I just use it to see liquidity. So when you make a low, you start to see, oh damn, they're buying heavily up here and all that good stuff. So if you get what I'm saying, I just use it to see if like buyers are when you make a new low or make a new high, are they stealing, liquidity, or they're like just not buying at all. This is how I kind of break it down, and that's just what works for me. Okay, let's go to SPY now because this is what we caught earlier today, right? And I called it out, and we caught another one down here as well. So you see here, right? Within the first 15 minutes, right? So let's go to the 15-minute here. Let's go back to the 15-minute. Where is it? 15-minute, right? This is your priority low, 15-minute. This is your open candle here. And this is the swing high here, right? Oops, let me get that fixed real quick. Okay, so 15-minute open, right? This is your 15-minute. So this is what you call your opening range breakout, right? If price breaks below, you short. If price breaks above, you go long. But it's just that's not something that I would suggest because it's very biased, right? But you can see here within the first, you know, hour of mark, no, 30 minutes of open, we did not have a full directional move, right? It just literally consolidated in this range, right? And I did not want to take a long or short because our premiums would have got screwed. But you can see here, right, that it broke down, made a new lower low, right? And then look, it broke below that low, right? And then let's go back to the 3-minute here so we can break down this trade setup that we took. So once it tapped into this low, right, you're going to see a relief bounce. Every time we make a low, right, near lows, we start to see some type of buying pressure so they can push price up because what it does is what is the initial goal down here is to fake retailers out, right? Like when we were new to trading, right, and you saw this thing dang near broke this low here, you're like, oh damn, let's short, right? Like 90% of us would have done that. Like, can't you all agree to that, right? We all would have shorted down here, right? And that's as soon as we shorted down here, oh damn, it went up, right? And then we would have got stuck in like, oh dude, this thing's about to, you better sell because you're already down like probably like 40, 50%, right? So the reason why we break this setup down, we take these trades every time is due to this fact right here, right? Oops, why can I not I'm gonna just lock everything soon. All right, so you're making lower lows, right? This is your trend line, right? As soon as we break above the swing high, we short, right? Look, I called this short here. Actually, you can go here too. This is a nice one. This is better, actually. Lower low, break above the 21 EMA, back down. This is, you're out right here, right? Out right here. And this was a nice setup as well. And this was what you call a crown reversal. Do you guys still hear me? Hello? Are you guys still hearing me? They had a power outage. Oh. Sorry, internet or something happened, resetted everything. So, should be live soon. Here, let's see. You guys hear me now? We're back. Let's reset. Should be back, right? Will, is we back? Let me reset this. Hello? Yeah, I hear you. Do you see me? Are we back? Do you guys hear me? All right, sweet. So, all right, let's go back to Spy because I just redid everything. So, you see on the 1 minute, once we tapped above this 21 EMA and this swing high, right? We saw weakness, right? Scalp down, right? We scalp these here. I think it was up here. Sorry, my chart is all acting retarded right now. I'm sorry about that. Come on, dude. All right, sweet. Now we're back. So we made a lower low here, right? And this is your swing high and swing low, right? So your swing high, when price breaks above this, you look to short. You have another one here. So let's say you enter here, short, right? Above the 21 EMA. This is what I always tell you guys. Stop loss, real tight, right? Real tight. You want to keep it real tight, right? Real tight. All right. So real tight stop up here, right? Above the swing high, right? You short down. It's a nice trade, right? So that was one that we caught. When it made a lower low, this was when you're out. Like good position wise, right? And you had a move, measure move, and this is what I always tell you guys. This is your measured move, right? So first move low is basically from this high, right, to this low, right? And then you copy and paste from the next candle down. So from this high to low, boom. Is that not picture perfect or am I crazy? Do you guys see my chart? Let me reset, let me reset that. Chart up. All right, sweet. So you see now from I'm sorry. It's just my internet is retarded. So this is the setup we took, right? You made a lower low, consistent low, low, right? Break above this is your swing high, right? You take a short above the 21 EMA. So you took it somewhere around here, right? Stop loss at this swing high, right? Back down. By time you break this low, you should be already out majority of your position because they're going to try to squeeze you back out right here, right? And you've seen that this swing high was acting as an area of resistance, right? Bam, back down. And you see the first moving leg up, down, right? Before we start to zigzag up, right? If you copy and paste it from this high to this low, right? Copy and paste, you drag it across from this high right here. Now you anchor it. Is that not picture perfect measure move? Is it a measure move? Do you see it? That's a measure move, right? Literally price is moving in a measured move. So what I mean by measured move, this is your first leg and this is your second leg, right? And we got our measured move. We capitalized on this. If you guys took that, you probably invaded your stop loss, but regardless to say, this was a nice setup, right? And then the reason why is literally the same setup down here, but nothing, it's just really nothing different wise. Like the setup was pretty much identical, nothing really different wise. And that was literally a pop and grind lower, and this was another one too, right? So we took one here, right? And you made a pop and grind, right? Same thing, right? Once you see a dip buyer here, you mark your swing highs, right? Above the 21 EMA, we add short, right? Stop loss, you can add your stop loss a little further out, but I mean, we said stop, enter here, say enter there, stop loss at this high, right? And we were out initially here because we saw like some choppy action, never broke this low. But I mean, if you guys held it and it never invaded your stop loss, I mean, your point of entry, you would have paid too, right? Nicely paid, really nice. But you see, the setups that I look for is literally, you literally have the same setups every time. The green and reds on your screen, what does that represent? The green and red is basically supply and demand. So when prices move, red is your supply, that's where your sellers are. Green is your buyers, that's where demand is. And I use a larger time frame to find it on my chart. And I'll break that down a little bit later, but let's kind of go over SMCI, and that'll be the last setup that we took today, okay? And around here, all right, let's go. I used a 3 minute on this one, okay? And these were a little bit scalpy, like it was a scalp the whole day. So, and the reason why I took that was, okay, you see that price is grinding, right? You're making the grind. You have your first leg up from all the way down here, right? And then it's just literally grind, 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 right? And exactly, you see that when you start to see this, I mean, it's strong. It looked like, oh man, you don't want to short this, right? But I took a short here. And the reason why I took a short here, you see, okay, this is what I'm gonna teach you. Okay, so you take notes here. You have a 3 minute supply zone here. And what I mean by supply is you see potential sellers here, right? You have a strong move here, and you see that this area. So the way I use supply and demand is you have this first candle here, right? Up candle, right? And then the count down candle, and then they retest this order block. So maybe the sellers are present here, right? And we took a short here, right? On the 1 minute. So go to the 1 minute real quick so we can break this down. So we took a short here, and look, boom. This was like a 30% move, right? And hindsight, I mean, if you took these, it would have invaded your stop if you held them a little longer. But I mean, nice to say, if you caught that, that would have been really beautiful, right? And it was just a big move lower, right? So, any questions? Any questions? Anthony, have any questions? Remember, market wants to steal your liquidity. Oh, no worries. This is how I trade, and I want to break it down for you so you can understand it, right? And look, you had liquidity here, right? This literally acted as an area of supply, right? Again, right? Break, break down, retest, right? Fail, retest the VWAP, tap and VWAP, right? So that means buyers were trying to bounce it back up, right? And back up, failed, back down. So you can see this is old. Don't disregard this green demand here. I haven't really been trading SMCI, but if you start to draw these swing highs here, right? Look at this. Look how precise these swing highs are, right? This is your swing high, right? Weakness up here. So this is, you have the supply here, boom, back down, right? Okay. So now, um, let's go over, what is it now? Nvidia. Let's see Nvidia real quick for you. You have a two try failure here, right? Potential double bottom here. 15 minute. Not looking so hot, right? The swing high failed today, right? See the swing high? Failed today. Right, let's go to 3 minute here. Not looking so hot here, but I mean, you have liquidity down here. This is old. Disregard that. Let's go to the 4 hour. Mark out our demand and supply zone. Let's look at nothing. Nothing here. You have a gap. No, that's not a gap. Let's see this. Not a gap. No liquidity. No liquidity. Failed to hold above this liquidity zone here. Maybe liquidity here. See 24-hour chart. 24-hour chart. You have a small liquidity zone here on a 24-hour chart. Watch for this, right? But you already got this liquidity up here too, which is currently holding as well. So you can say this is liquidity here, right? Your 118 and 116 is liquidity, right? Broke below this liquidity. Let's look on the 4 hour so you can see a little bit better, right? Every time we broke below look this low, grab liquidity, bounce, right? And same thing, right? Broke below these liquidity, bounce, right? Same thing. Yeah, look at this zone, 24-hour, and now let's see if we get a double bottom bounce. If we get a double bottom bounce here, that'll be nice. I mean a triple bottom bounce, right? This is the area of supply. I mean demand. See if we get a bounce here. Fill this gap at 126. That would be nice. But we do have a gap here. Remember that we have a gap here at this 126 area. So let's see if buyers really are able to actually fill this gap here, right? And if we are able to break above, then we'll look to, let's go on to 15 minutes to see those swing highs and swing lows, right? This is the first thing we mark, right? First thing is first, we mark these swing highs, swing lows. So now this swing high is invalid, right? Because we already broke below it. And this swing low is not valid as well. So now what we're watching for is the swing high here, break above this swing high, right? Boom. Swing high here, right? That's your new area of resistance, right? And then you have the swing high as well here. That's your area of resistance. Let's go to the 3 minute, be a little bit better, easier to see. Right there. And you also have one here as well too, if you like to mark that on 3 minute. So plot these out on your chart, right? And then this is your crown reversal here, back down. And then this is your supply zone potentially. So now you have the seller here as well too. Right? So watch this. Break of 118.94, back above the VWAP. Let me turn this off. Right? Break above this, you see 120. If we can break above 120, we can see this 128.75 and then 121.60, right? And then maybe 122.40 to fill the gap at 126, right? This this is kind of hard, but you have strong buyer down here though. They dip into liquidity and grab liquidity here. So maybe if they're not present down here, then we may fill this 116. Are you currently holding them? Or you're like, yeah, you're swinging. You should be good. I believe Tesla may move lower here. Honestly, are you holding them since earlier? Or what time did you buy them? Anthony, I don't know. Late today. I wouldn't think you don't want to buy near lows. Buy it high and short, go down. Remember, Tesla has earnings on Tuesday, so be mindful of that. Don't trade. Don't lot of those. Do not lot of those puts. Just follow proper sizing. That's fine. But big news is releasing on Tesla on Friday. I mean on Tuesday next week. So they have earnings. So that will move big. Like I'm not too sure what they're projected to move by, but let's see what they're forecasting implied volatility wise. Estimate. Okay. If you go on next week contracts on Webull, let's see how much those contracts are so you can see if what is the implied volatility on these. IV is, wow, IV is IV is low. 20. Damn, they're expensive, dude. So implied volatility on these contracts are about 200%. So expect a what, $2 move? No, I think Tesla will move by a $20 difference. I'm not doing anything. Is it still froze? No. Okay. So expect um, Tesla to move $20. So either we break this 220, we break this 220 3308 back down, right, to retest this 325 EMA back down to this demand, or we squeeze and break this 271 back to 3. I think it's a 20 plus move. But you can see a decline in volume go, right, leading to earnings, right? So just be mindful of that as well. Okay. And let's kind of break down Tesla. I mean, AMD, right? I know you guys want to watch AMD. AMD, right? Literally, like a couple of days, literally back down and has earnings on July 30th, right? Right. So now we're tapping back into liquidity here down here, right? No one wants to buy because they're scared, but keep in mind we're breaking up below that swing low, and let's go to my other chart as well so I can break it down for you as well here. Let's get out of that real quick and then full screen this here. AMD, right? And let's go to the 1 day, no, 4 hour, right? So look, off already that we know, right? From this low to this high, we're currently at a 70.86 discount on whatever you want to buy, shares, whatever, right? And now, if you look on MACD, right, the MACD here, right, you made a higher high in momentum. Actually, it's 1 hour, sorry. So look, you made a lower low here, right? But you can see here that we're making lower lows, right, on the hourly, right? But look at this look at here, shift up. This is divergence. Divergence is basically when price or momentum. This is momentum. Remember this. This is momentum. This is price action. Price action is what we trade. Momentum is different. Momentum tells you if who's in control or potentially could be in control, right? And or losing that energy, the energy of steam. I don't know, honestly. Um, I just don't know really much about um, I don't really risk earnings because it's not like you saw Netflix, right? Netflix literally, I'll break that down a little bit. Let me kind of break this down for you so you can understand what is divergence here. So you can see um, right? So look, oh, it is in the way. All right. So if who who is able to tell me what kind of divergence is from staring at this chart? Yes, but we're looking for either. Yes, I know. I understand it's regular, but are we in a bearish divergence or a bullish divergence? That's what we're looking for. Bullish. So this is just something to be mindful for, right? We're in a bullish divergence. So will we? The thing is, this is an hourly chart. The hourly chart is good enough to give us a potential thesis, right? An idea, an hypothesis. We don't have structure until it plays out, right? So now we think, okay, we see that AMD has a bullish divergence on the hourly, right? Maybe let's risk look into it, right? Look into it. So it might be some time for you guys. I think honestly, so what I do instead, if you look here, right? Add into those shares, them AMDLs. Literally, it's a good time, honestly, in my opinion, for AMD to be added into that long-term portfolio, right? And you can have a stop loss at 150.03 or whatever the case may be. But if we dip lower and we still making lower highs, right, on a on the divergence, then why not? You know, and I believe it's a bullish divergence. So if we go to Qs real quick, right? You see Q? Let me ask you one time. What is this again? And I'm not going to draw anything. I want you to figure it out on your own. Bullish, indeed. So you know that we're we're in a bullish divergence, right? See, we're making lower lows, right? First low, 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 right? But that the momentum is shifting to the upside, right? But until we break prior swing high here, so prior swing high, bang, right? Prior swing high here, right? This is areas you want to be watching for to break, right? This is an area you want to be watching for to break. So these are areas you want to watch for to break on the hourly. 30-minute might be different. 30-minute remains the same. So now this is an area you want to be watching for to break, right? If we break this, then you could potentially squeeze, right? And you can see here on a 30-minute that momentum is bullish, right? I mean, not really super bullish, but just enough for us to know, right? And 4 hour is still kind of consolidating. It's trapping a lot of people. But keep in mind here, this was the bottom of that June lows, right? Before the month end. And we may bounce here, right? And if you draw from this anchor lows here, right? Anchor lows to this high. Sorry. Let me turn this off. Sorry, this is kind of too confusing. And let me swap the charts real quick. See, SPX losing the 20 EMA, mid 20s, 21 EMA. But let's see QQQ for a second, right? QQQ, right? You have a strong imbalance here, right? So you see this, the weekly candle here is in the, we see that we bounce in this liquidity zone here, right? Right? And now we're literally near those lows here, but you still have an hourly, I mean a weekly demand here, but let's see, we never tapped into it just yet, right? So I believe, in my opinion, that we may get a little bounce sooner than later, right? And this is not valid. Let me draw these lowers here and mark this chart. Boom. Right? And then there. Right? So we're kind of stuck in this here, right? And if we can get a bounce, then that'll be great. But we can draw the lows from this low, not this low, because we broke above and then made a low, right? And then to this high, right? Look at this. At the 61.8%. 61.8%. Thinking about adding to some calls sometime next week. And we have big news next week as well too, which is PCE data. So Fibonacci is basically some mathematician name, I don't know their name, but they use fib. Fib was like some mathematician. I don't know. Let me go screen share. Screen share my browser real quick, and so you guys can see what fib is. And the Rodin ratio. Hmm. Basically, what I use fib is basically to find a. Okay, let's go over this here. Let me screen share here. Okay, let me rechange the screen real quick so you guys can see my idea behind it and why is it. Oh, how to use it. Okay. So what I use fib is to basically see what if price gets into a retracement, right? Usually it tends to give buyers another time to uh accumulate. So for example, if you can see back to the charts here real quick, right? You have a maybe a double bottom bounce here, right? And then you can see on the last one as well, right? Let's go back to where is it? Let's go to Spy because Spy a little bit more clear. But Q's, I like Q's, not gonna lie. QQQ looks beautiful, right? And then you have Spy here as well. Where is it? Watch here, right? So this is the low, right? Let me see. I'm gonna go to the daily chart. Nope, 4 hour. Right. Okay. So 4 move down, 4 move down, back up. Right. Not really seeing anything, but oh, I think ES would be better. ES might be better for you. Oops, sorry. ES futures. Watch this. So let's go to the 4 hour real quick so I can break this down for you. Watch this. Right? Look at this. Right? You have this two-legged move down. Everyone's bearish, right? But you have a discount and retracement. So when you draw this anchor low, because it broke this high right here to this high, you're getting a 50% retracement, right? And you're literally this liquidity right here, right? Liquidity bounce. See that? Liquidity bounce. See what I mean? You grabbing liquidity in the golden zone, right? And then right now, SPY is, I mean, SPES, right? From this low, right? Anchor lows right here, tapping into liquidity up here, 70.86%. But look, this was an area of accumulation back in the day. This is where we held during June, right? And maybe we hold this, right? I would like to see it. If we dip a little bit lower, then not looking so good here. But you're having a zigzag, low zigzag momentum, just straight chop and then back down. And then let's see if we get some type of divergence. None really. 4 hours literally to the floor. Momentum RSI to the floor. Last time it was on the floor, right? Last time RSI was on the floor was here. Same. See that? Look, that's confluence right there. Do you not see this? Right? Look, I just showed you this right here, right? Look. Do you not see that? All right. See? Now look at this. The last time we were oversold was in like May 30th, right? Now is July. That's the last time we were oversold. So you got to put time into the charts because the charts tell you everything. The news do too, yes. Any questions? Um, Give me one ticker that I do not have marked out on any of my charts that I would like to break down how to identify key levels and how to draw your supply and demand zones. And does not, let me ask you this, be, real quick. Does this not, does this not look like what we just encountered on SPY? Two-legged pullback down, right? One leg, two leg, three leg actually. So still making, maybe might dip a little lower, but may dip a little lower, but still nice. Alrighty. So you see my thesis, right? And if we do break lower into this 550 area, then that's a really dangerous zone because if you look on a weekly chart here, right? Not looking so hot, right? And from this anchor low, right? You're currently sitting at 382, which is basically where the 618 backwards, right? And let me kind of break that over for you here, right? You have that two-legged move down, three-leg, one, two, three. This is not a leg, well, technically a four-leg structure, but yep, that's pretty much that. Had a rising wedge here, maybe a little dip lower, right? Back into 382, right? See here to here, holding above the 382. Let me delete this here, right? Tapped into the 50%, right? Well, basically near the 50, but technically not all the way down to the 50. But you see we held above here, right? Touched the 20 EMA on the daily, right? But buyers were strong here. This is a different scenario back in the day. Now it's not like that, right? And then now you have these lows here from this low to this high, currently holding the 50. Until it breaks lower, then we look too short and just trade with the momentum. But pretty much is that. I mean, it's not, I don't know. I'm just giving you my thesis. I mean, I'm not going to call the top or bottom, but yep, that's pretty much that. What's A? No, negative. Oh, Nasdaq is uh QQQ, and so QQQ is Nasdaq, and ES is SPY or SPX. How long have I been trading? I've been trading since COVID. Since COVID. But one thing I did do wrong, Anthony, was not load into my Roth during COVID. Dude, imagine if we loaded during COVID, bro. Oh my gosh, would have been up like crazy. Have you? Did you guys learn something today? Because we're dipping into this liquidity here. See, NQ. NQ looking weak for 20-day moving average. Yep, yep. It's okay though. I mean, nothing wrong. We never got to capitalize on it, but hey, it's never too late, right? Hey, yeah, I did too. I had family members that passed away from COVID, unfortunately. My grandma. So, you know, it's hard. It's hard. Nothing's easy, guys. Nothing's easy. I understand. Thank you, Anthony, for your condolences. For you guys that attended this class, I really appreciate it. That shows me that you guys are eager to learn and want to get better, and that means the world to me, honestly. Like, and one thing I want to express to you guys is, so for example, right? We take a trade, right? Trade one, right? Let's say Tesla calls, right? You kind of break this a little bit bigger so you guys can see that. 2024, right? Tesla calls, right? Tesla calls, but you're you're in the trade, right? And it's currently down 10%. I want what I want you to do off the rip, right? Is follow a system. Follow a system. What is your system? Number two, system consists of a 15% stop loss. I don't care. I don't care if the green if it may go green or red, or unless I'm holding that trade with you, we're gonna hold it. But if you take a trade on your own or follow any analyst in this group, I want you to consider a 15% stop loss. 15%. Why? And let me break this down for you. So those that are trading, right, may trim at 10% to 15%, right? Disregarding disregarding broker fees. Don't forget, the broker has to make money, right? I know some brokers, for example, SPY contracts, depending on the day, charges $6 per contract to close, to open slash close, right? So let me ask you this. Will a 15% stop loss and a 10 to 15% trim make you profitable? Can you guys answer my question? You think it'll make you profitable? A 15% to 10% stop loss. I mean, a 10% stop loss. No, a 15% trim to a 10% trim will, with a stop loss at 15% and broker fees, will you be profitable? Think that clearly. But why? Why trim at 15 or 10%? You're selling yourself short, but then when you take a bad trade, you're gonna sell it for more than 15% stop loss, right? You see what I'm saying? Think about it. A 15% stop loss, but you trim at 10% and disregard broker fees, right? So let's say, for example, right? Let's drag this across here, right? One spy, right? So let's say spy 565 calls, right? Are 80 cents per contract, right? We buy in 10 contracts, so 80 times 10 is what? 800 per contract. And let's say they charge $6 per contract, so we just bought, so broker fees equals $6 per contract, so we bought 10 contracts, so that's 60 bucks. So to take the trade alone cost you $860, right? So $860. Let me put an example. All right. So 860 for the trade, right? But then you take a trim. You take a trim at 10%. 10%. So what's 10% of that? That's $80. $80 per contract. Right? So now your trim equals what? $20 profitable per contract. Not realizing you have to pay broker fees. Another $6 per contract to close. Get what I'm saying? Now you see what I'm saying? This is one thing that we as retailers don't know, right? Does the math make sense to you guys? Same thing. If they still got to charge you money because the broker ain't gonna do it for free. They got to make money somehow, right? See what I'm saying? The math really makes sense, right? Take a trim. Let's say you take a trim. Let's say I don't know. So trim percent is I don't know how many contracts you would have, but I don't know. Let's say I trim a third. So let's say 8, 10 contracts. So 3% of 10% is $30 actually. Sorry, that's $30 because 80. I take a trim of threes, so I do threes. I trim by threes. I trim a third as soon as I see profitability. I use just Weeble. It's all the same. It's nothing different. It just matters if you do the math. This is a mathematical game. If you want to be in it for the long game, think about it. You're trading numbers. You're trading. It costs money. Everything is percentage wise. So, right. So now, 10% trim. Right. 10% trim. Let's say I take a three of three. Let me close that. So 10% trim of 3 contracts. Right. So that 3 contracts, 10%, that gives me 10% of that 3. So that, yep, 80. Yep. Right? Let me see, is that right? 80 divided by 10 times 3, right? No. 10%. 80. Oh, sorry, wrong. 3. No. 80 times 0.10. That's $8 per contract. So you're making you're making, let me delete this because it's not acting like how I wanted to. So you would have made $24 for 3 contracts, for closing 3 contracts. 3 contracts, right? And then you would have took a trim here, realizing it was $24. Realizing it's $24, and you just trim to close $6 per contract, and now that costs $18 to close. So you just made how much? $6 for that trade. You think that's worth your time to make $6 to be in a trade? You see what I'm saying? I just use Weeble. Weeble is a little bit easier, and I just use my phone for it. You don't need to go crazy with the chart and try to connect it to TradingView style. Yeah, right. So you got to do the math. It doesn't make sense, right? So now let's do this, right? Take the trade. It costs $8.60, right? Let me to put open and then broker fee equal $60 to close, right? Now that's 920, sorry, right? And now you take a trim at 25%, right? So let's say we trim of 3 contracts equals, so 3 contracts, all right? So 380, so 80. Oh, this is a math game, I'm telling you. Okay, so you have 3 contracts at 80, so times 80 times 0.25 times 3. Yeah, so 60. No, sorry, nope. 80 times 0.25 is 20. 20 times 3, 60. So $60 to close 3 contracts, right? So now when you close 3 contracts, that just pay for the you just paid for your broker fee to close, not to open. So you already off the rip, not green, right? I think that's wrong though. Let me see. 80.25 is 0.2. Yep, yeah, 60, right? Stop loss back to break even. So if you want to close, you still make money, right? Let's say you close all of them. So you close all. So you close, let's say 10 contracts times 25 times 100. You just made 250. So you made 130, I think, off of that. Yep, 250 times 130. Let me see. 250. So let's say we closed all out on 25%, right? Closed at 25%, right? Do the math. Let's do the math real quick, right? You have 800 times 0.2, no, 0.25. No, yeah, 250. You made 250 off of that trade. 250 minus 120 equals. Yeah, that's right, because I did take a trade and I only scale like, yep, that makes sense. That's right. Yep, 130 off that trade. Stop loss at break even. Hey, $100 still better than no money, right? Oh, it depends on the price. I usually go in my trade, so my account is roughly about 10,000, and I risk about 800 to 700 per trade, and it depends on price eventually. So if a trade is more than I guess $1 per trade, then I'm risking roughly about 7 contracts to 8 contracts, and I trim accordingly to plan. If plan goes to 25%, I trim a quarter or a third. I roughly typically trim a third, and then I move stops up to break even and leave the remainders. And then once it gets to 50, I trim another third, and I'll leave the rest. Once it makes a new low or a new high, I trim. That's just how it is.